Okay, well, good afternoon, everybody. As I mentioned earlier, my name is Todd Christensen. I work as the SVP of Advancement and a Member Experience with CapEd Credit Union. We want to welcome you to this afternoon's second webinar of our 13th series of CapEd's Lunch Money, a financial webinar series. So we welcome all those who have joined us today. We look forward to others joining us here as they log on here this afternoon. But we'd encourage you from a viewing experience to go ahead and open up your chat window, as well as view the participants. Throughout the presentation today, if you have a question, please go ahead and type that question in the chat window, and then we'll work to be able to either answer those questions during this presentation or bring that information to you on our next or follow-up webinar. So welcome, everybody. We're glad that you're here. It's my opportunity and pleasure to introduce you to Lisa Hamilton, our Business Development Manager here at CapEd. She's an incredible educator. She spends time in both classroom and other organizations sharing key information around financial literacy. And this is her follow-up from this last Tuesday's presentation. Just as a reminder, that video is available at our website, capedcu.com/lunchmoney. as will all the other webinars that are presented in the coming weeks. So with that, let me turn it over to Lisa Hamilton. Lisa.
Thank you, Todd, for that nice introduction, and welcome back to all participants that were join us on the webinar on Tuesday. And welcome those of you who are new to this webinar. We're excited about this Lunch Money series. And during our last webinar, we had the chat window open, and we did have some questions that were answered throughout the webinar with the information that I already had planned. There was one question, however, that we did not address, so I wanted to address that at this point. So this question from Building Your Spending Plan was, how safe is it to connect my checking account to a finance app? That's a wonderful question. Doing a little bit of research, what I found is that to protect your checking account, make sure to read the fine print from your financial institution and the third-party service. Examine the terms of service for information on the third party's data security practices and whether your information can be sold to other companies. If your financial institution reserves the right to waive fraud reimbursement, consider whether the service is worth the risk. If we're dealing with third service parties, we have to make sure that we're monitoring our accounts on a regular basis. If there's suspicious activity, change your passwords, report the transactions to both the credit union or the bank and the third-party service. The longer you wait, the harder it will be for your financial institution to help you. Limiting the number of apps you use can also help. You shouldn't share your account information with more companies than you are able to keep track of. The basic thing, and the part that I personally practice, is I limit my risk by using my financial institution's in-house service. CapEd, for the mobile and the online banking, you can access your accounts on the go at your convenience, 24/7, 365 days a year. You can view your account balances. You can transfer funds. There's a bill pay option on there that's free. All of these services are free through CapEd Credit Union. And another nice feature that we have on there is you can deposit a check with your smartphone via the mobile deposit. And that is a wonderful feature. So thank you for that question. And please feel free to ask questions within the chat. If we aren't able to answer them during this webinar, we will definitely come back and answer those at a certain time. A little bit of a review. If we want to follow our spending plan, first we talked about building your spending plan. And for those of you who are not with us on the first webinar, I'd like to review just a little bit on what we touched on Tuesday. And one of the biggest questions I think with building your spending plan and even following a spending plan is, why don't we stick to a spending plan? Similar to a health plan, why don't we stick to those plans? Goals and plans can be scary. And because the fear of personal failure is frightening, this may increase our procrastination. The key to success, however, is to just take the first step and get started. Just break it into baby steps. Just get started. And I'm happy that you're here today because this is your first step. I assigned just a little bit of homework because we have to take what we learn and actually apply it. So those of you that were in the last webinar, I asked everyone to just incorporate one concept from their the building and spending plan webinar. Remember, in order for a spending plan to be successful, you need to understand where your money is going. If we have no idea where it's going, then we're going to have a hard time building that plan around that. So I asked everyone to try to go in and start tracking their expenses for 2 months. So the other piece of the spending plan, we have to think about an emergency savings. Financial planners say that we should save 3 to 6 months worth of expenses and place that into an interest-bearing savings account. We need that money to be accessible, but we do not want to use those funds until there's an emergency. Now, that could be very daunting for some. If I add up my expenses to save for 3 to 6 months, that might be difficult for me. So again, I may procrastinate. So let's set some incremental benchmarks. Let's start with just saving $500. And then when you reach that goal, shift that up to 1,000 and then so on. Move towards the 3 to 6 months. Another question within our spending plan and sticking to our spending plan is, I have high interest debt. And I also want to build that emergency savings. So which do I take care of? Which do I take care of first? So generally speaking, paying off high interest debt should take priority over savings and investments. An emergency fund is the one exception. It only takes one unexpected expense to force you to take on more debt and possibly undo your debt repayment progress in the process. We discussed a 50-30-20 proportional budgeting plan. So you want to base your spending income on your net income. That's your take-home pay versus your gross pay. Your gross pay is the amount of money earned before anything is taken out before taxes and other deductions. So for this example, your monthly net income is $3,000. With the 50-30-20 proportional budgeting, 50% would be going towards your needs. That's $1,500 in this scenario. 30% would be for your wants, $900. 20% would be going to your savings, which is also possibly a part of your debt repayment plan. So this is stated at $600. Track your spending for at least 2 months using the method you're most comfortable with. You could use a spreadsheet, an app, online banking, or pen and paper, or possibly incorporate a couple of those strategies. So in this scenario, the comparison here, the spending with the 50-30-20 didn't turn out quite like how the model suggests. They were spending $1,300 on their needs, $1,500 went to their wants, $200 to their savings. Now, don't worry if this doesn't match up when you try this. It won't match up. You want to get it to that point, and that's why we go for a couple of months so that we can adjust. And if you're working on paying off high interest debt, you may need to adjust this model. Maybe you would like to do a 50-20-30 or a 50-10-40. So we need to look at what those wants are and possibly eliminate some of those. Go through your expenses and eliminate some items that are just wants until you can get your budget in order. When we talk about debt repayment, you might be wondering, why is this important to my spending plan? Your debt repayment is very important because if high interest loans and debt are eating up your excess funds that you could be putting into your savings account, that is a big part of your spending plan. We're looking at those long-term goals that we talked about. Retirement, building that emergency savings. We want all of those funds to be able to go to help you with your long-term SMART goals. Debt is stressful, it's expensive, and it limits the amount of money you can put towards your life goals. So how we would like to start with this is when you're tracking your expenses, also make a list of all of your debts. We all have different types of debts. No one's spending plan is going to be alike. Then, once you've listed those debts, let's think about some different debt repayment strategies. The snowball method. How this method works, you take all of your debts and you arrange them, paying them off from the smallest balance to the largest balance. and then you cross off the ones that you have paid off. When you take those small debts and cross those off, pay them off in full, don't reuse them again, keep them at a zero balance. This is really exciting. It helps us build confidence and it makes us feel empowered. Then we can move on to the other debts. The avalanche method. This is where you arrange your debts and you're paying them off from the highest interest rate to the lowest interest rate. This strategy eliminates your most expensive debt first. And this works really well for those who want to use the most mathematically powerful strategy, those who are determined. Your most expensive debt may also have the largest balance. So you might want to incorporate a couple of different debt repayment strategies that work for you. The final debt repayment strategy that I like to discuss is a consolidation loan. This is a new loan that's taken out, and the borrowed money is used to pay off all of your other debts, leaving you with only one loan to keep track of. That's easier for some. I would highly encourage those of you that do have loans and you have your debt payments, try to set those up on an automatic repayment plan. Go into your online bill pay, go into CapEd Credit Union's online bill pay and set those up to be paid automatically. That way, if you're out of town or you forget, you know that the minimum payment is taken care of, and then you're not going to see the late charges that happen as a result from not making those payments. Now, this consolidation loan you could possibly look at doing a second on your home if you have some equity in there, but I would highly encourage you to call your credit union or your bank, wherever your financial institution may be, and discuss the best plan for you, because you want to make sure that that interest rate is not higher than all of your other loans. So once you have your strategy decided, you're going to add up all of your minimum payments. You must have this total in your monthly spending plan in order to avoid additional fees. And the rest of your debts on your list will receive their minimum payments. So for this scenario, we have a credit card balance. The minimum payment's $30, and there's a student loan with a minimum payment of $80, a mortgage with a payment of $1,028. Again, we're always making the minimum payment and making that payment on time, if not early. So with this strategy, it depends on what they chose. This could be the snowball method, where possibly their credit card was the lowest balance that they needed to pay off. They're paying an additional $150 to that card while still making the other minimums. When you pay off that debt, you get to cross that off your list, and then you get to add its minimum payment to the next debt, and along with that, the additional funds that you were paying. So now this person is moving on. They've crossed off the credit card debt. Again, don't reuse that credit card unless you can pay that amount off monthly. If you can't afford to pay for it in cash and pay it off monthly, please try not to put that on your credit card. Make sure that you're living within your means. So you can move to the student loan. You're making your minimum payment of $80. You're taking that minimum credit card payment of $30 and the $150. We're really working on paying off that student loan while still paying that mortgage. Now, you might be wondering, why am I pulling in how to spot scams? Oftentimes when I'm teaching classes, I've heard so many different stories in the community about how a grandparent or a parent or a friend has saved, and they've done very, very well. They've paid off their debts. They have an incredible amount of money waiting for them in their emergency savings or in a different savings plan, and then they fell victim to a scam. It's sad to say, but there's a lot of scams out there, and every day the scam artists are getting smarter and smarter. So this is really a way to protect your savings account. I want you to be proactive. Don't be afraid. Don't be reactive, but be proactive. So over here, it takes about 82 seconds. That's the average amount of time it takes for the first victim to fall for a newly launched phishing scheme. It's super fast. And then these scams are designed to trigger an immediate response. The stress and the urgency affect the way your brain processes the information. Many of these scams They intimidate you and they want you to react. They want you to be fearful. Many different types of scams that are out there. It may be unexpected money. You may be receiving an inheritance of some kind, unexpected winnings, buyer-seller fraud, fake charities, dating schemes, get-rich schemes, threats and extortion, and then also there's identity theft. So a way to spot scams and also deal with scams is buy yourself some time. If you receive a phone call or if you receive an email, they are going to make that situation very stressful. They do not want you to have time to truly think about that situation, or there's a sense of urgency. You need to react quickly or this will not come to fruition. So take some time. It's okay. If it is that wonderful of a deal, it will be there for you tomorrow, and it will be there when you take the time to go research to make sure that it is legitimate and valid. So take some time, pause. Even if it's just for a minute, this will allow your brain to process the situation. If you're looking at an address bar in email, get in the habit of visiting the websites directly instead of following links contained within emails, especially when you are updating account or billing information. Never, ever click on links from emails that are coming to you. If you are not expecting that email, do not click on the link, do not forward the email, go out of that email and do an internet search. If CapEd is reaching out to you for information, get out of that email, go to the website for capedcu.com, reach out to us and ask us, have you reached out for this information? Go to that business, ask them if they have reached out for that information, make sure if it's valid. You go directly to their site. Cross-reference the company's identity. Again, get out of that original communication and do a separate search on your own. If you're using a smaller screen if you're using your phone to access this information, sometimes a larger screen is going to make it more visible. You might see that the site is not secure. So move out of that. Don't act from your phone. If someone's calling you and putting that pressure on you, again, hang up the phone, call the person that it is referencing, get that information on your own. If you are using public Wi-Fi, that Wi-Fi is not secure. Please do not check your bank accounts and do your online shopping at a coffee shop or an airport or other Wi-Fi hotspots. Those are not secure. And then look for sketchy emails. Suspicious password resets, if those are coming to you, that shouldn't make sense to you. Do not go in and click on a link and do password resets. Again, go to that direct business. Do that from your initial search. Don't click on the links. Do not, if there's requests for personal information or money, again, it's if you've come into unexpected winnings or deliveries, if it's too good to be true, think again, get out of that, go do your research. Please do not fall victim to the scams that are out there. Reporting scams, we have some information right here where you can report those scams. What I would highly encourage you to do is talk to your friends and family. Make sure that people know that these scams have happened. Reach out to your financial institution and other companies that might be involved with that scam. We're going to have some wonderful lunch money webinars upcoming November 3rd and November 5th. And these will be presented by Toby King. He's CapEd Credit Union's Chief Information Officer, and he is going to have some incredible information to help you protect yourself. Again, not trying to put fear into you and scare you, but we want you to be proactive. I want you to hold on to that savings that you've worked so hard for. You can also request a credit report. You can receive 3 free credit reports each year. You can go to annualcreditreport.com to get started. And from there, that will show you your credit report. Again, what does this have to do with my spending plan? Well, if you have something listed on your credit report, if you have a car loan on your credit report, and you do not have this car in your possession, you may have been a victim of identity theft. So let's be proactive. Let's find those items and then let's report them and take the necessary steps to protect yourself. As far as getting your FICO score, that will not be listed on your free credit report. You can go to creditkarma.com to pull up your approximate FICO score. Now, FICO scores, they're anywhere from 300 to 850 points. A poor score is anywhere in between 300 and 500. And then your exceptional scores are 800 to 850. And if I don't want to get into the actual breakdown of credit scores, again, we're going to have another incredible lunch money seminar on October 20th, and that will be hosted by Jenny Sanford, Capid Credit Union's VP of Commercial Lending, and she will be discussing basically how to manipulate your credit score, make that credit score as high as possible to help you with your lending items. So we want you to make sure that you're getting the best interest rate on your loans and that you're not paying extra for that. Your credit score is very important. It's like your financial report card. As far as pulling your free credit report, you can pull 3 throughout the year. And the reason why that's important is you can set that up so that you're pulling possibly one in the fall, one in the winter, one in the summer. That way you have a different timeline. And they are pulled from Equifax, TransUnion, and Experian. A lot of the information that I was using today for today's webinar, I'm gaining a lot of this information from capidcu.com. And if you go to our main page, you will see a tile, Educational Resources, and from there, that will take you to It's a Money Thing. And within It's a Money Thing, we have lesson plans, we have videos. I was hoping to share a video with you today because they're animated and they're just wonderful content. They flow quickly. Educators, teachers, parents, anyone in the community, if you'd like to share this, I encourage you to watch them yourself. I've learned incredible information. Go to those. The videos are about 3 minutes long. They're free. You do not even have to be a member of Capid. This is part of our mission. We want to make sure that we're helping you have a better financial well-being. So please use these resources at capidcu.com. And if you have questions that have come up after the fact, please feel free to email me, Lisa.Hamilton@capidcu.com, and I'll find the expert to help you with that, or I'll help you myself. And with that, I sincerely thank you for joining us today. I hope you learned a couple of new items that you can incorporate into your spending plan. And again, remember, it's just getting started. Just take the first step. Just take that first step and share your information with others that'll keep you accountable. And I hope everyone has a wonderful day. And with that, I will turn it over to Todd Christensen.
Great, thank you very much, Lisa. We do have a couple of questions, at least a good question down here from Dan. And I think it's one that's well worth addressing. It says, what about debt without interest? I pay monthly, but will be paid off before the interest is applied. We would commend individuals that have put themselves in a position where they've bought something and it's no interest for X number of days or X number of months. One of the things that you need to be aware of is often, and it's most likely most often, that if you do something that there's no interest, but you pay it off in that period, you have the benefit of not paying the interest. But at the moment, if it's not paid off within that time allocation or time that's set out, then you have all of the interest, not only on what the principal balance of that loan is, but going back all the way to day one. So Dan, your question again, what about debt without interest? I pay monthly, but will be paid off before interest is applied. We would commend those and to take that step. Make sure you have those debts again with the lowest interest or the highest interest, depending on how you want to go after that, either the snowball or the avalanche method. So Dan, hopefully that answers your question that yes, continue to go forward and paying that off so you don't incur the interest. So thank you, Lisa, again. We appreciate the questions. If you have other questions, please feel free to type those into the chat area, and we can address those either now, we have a few minutes, or we can take those and present them in the next webinar. The next webinars that are coming up are available and listed at capedcu.com/lunchmoney. The two that are coming up next, if you want to hit the next slide, if you will, there, Lisa. This is our next one. Let me talk about this for a little bit. Oh, there we go. Lunch Money next week, Tuesday, October 13th, we have Jen Wolf, who's an estate planner, and she'll be presenting information around how to demystify and the estate planning and unmask the estate planning. What are the challenges that are there? In my personal household, we're working with my mother-in-law who's aged and making sure that those end-of-life elements are well planned and prepared so there's no surprises. So join us next Tuesday, October 13th, again from 12:15 to 12:45, 12:50 for some incredible information. This here, give, for those of you who are not yet CAPED members, we do extend an invitation for you to join CAPED. We have a program that is called Get 100, Give 100. This is where you take an opportunity to open up a CAPED high yield checking account with many great benefits, including high interest, 2.5% interest on balances up to $10,000. You can see some of the other things that are qualifications to receive that. And once you meet those qualifications, once in the first 3 months, you receive $100 deposited into your account. At account opening, you have an opportunity to choose the school district, school, and the program where you'd like to give the $100. We help facilitate that on behalf of our members. And in the last little over 2 years, we've been fortunate to be able to provide about 180,000, just south of 180,000 to area schools. That also means 180,000 to our new members. So take a look at that opportunity. You can check that information out at capedcu.com. I don't see any other questions that are coming up in the panel over here. But if you have any other questions, please feel free to reach out to us directly to Lisa through her email and share those questions with you. With no other questions, we express our appreciation for you attending today, and we look forward to seeing you on subsequent webinars coming up on Tuesdays and Thursdays, the remainder of this month, and through a large portion of next month. Have a great afternoon, everybody.